this wasn't fraud on crypto, right? Crypto didn't fail. Everyone's like, oh, this is a crypto failure. No, this was not a crypto failure. This was a banking failure. Mm-hmm. And banks have failed in this same way for, centuries. Is bad people do bad things and cook the books or steal. Let's have one giant pool, like a global pool, because that's more efficient. And let's have it be auditable and public and on a permanent immutable ledger. And then when the inevitable happens, right? When there is a loss, people can make claims. Clearly, we're still in a bear market. I mean, you don't have 3%, 4% up days in bull markets. They just don't happen. Bull markets are markets go up most days and down sharply on bad news or perceived bad news. We have exactly the opposite. The market goes down most days, goes up sharply on good news or perceived good news. And most of what people are saying is good news. Well, the Fed might only raise 50 basis points instead of 75. That's good news. I mean, if you looked at any of the economic data,
it's bad.
It's bad. Like worst ever bad. I mean, there's a whole bunch of things. I mean, home sale transactions, freight cost increases are actually negative, decreases. I mean, things that we've just never seen. And all the charts look the same, right? They kind of have this little bump in March of 2020, and then they have this massive spike, and now they have this massive spike down. But the down is farther down than the up. And so all of this fear of inflation, fear of overheating economy, no way. And actually interest rates are starting to go. So, I don't have the exact numbers in front of me. I could pull it up. But my guess is that TLT, the long bond, after just getting massacred, is probably in the last month up significantly more than stocks. This is the worst year for bonds in the history of bonds. Like awful, terrible, horrible. There's half of it is venture. The other half is not venture, right? The other half is literally money laundering. I mean, no hiding it. No, I mean, it's literally shell companies set up. They're a website. SBF is 100% owner, which is just crazy. And so half, like 200-ish companies aren't companies, right? They're just fake. Now, the other half, actually, there's some venture capital investments. They invest in a whole bunch of funds, not ours. But, and like I said, I've never met the guy. And then they did do some deals, but, and look, I remember we might have even talked about this. They definitely did little tiny bits in real companies and whole bunches of money in very dodgy stuff. Mining is really, really important, obviously, particularly for Bitcoin. But I struggle to understand this, especially when you look at the value of the public miners, Marathon and Iris and Core Scientific. They didn't spend this much money. They spent hundreds of millions rather than tens of millions. It's hard to put $10 million to work and get miners. So I think this is not real. My opinion would be this is not real. This is supposition, not assertion. But one of the things that's really clear about FTX is the circular nature of so many of their transactions.
Yeah, I think that's a really good point.
Right? And so Sam makes an investment in Sequoia, and Sequoia turns around and makes an equivalent investment in FTX. These guys make an investment in Genesis. Now, then Genesis lends FTX a whole bunch of money, with bees. And so is this here, I'll give you money to lend me back, but there's no money. This is the part that just boggles my mind.
Yeah.
Is these guys gave people, right? They gave Voyager money. They gave BlockFi money. They gave these guys, they gave people money that wasn't real. And I'm like, but how did that happen? How did they get a bank or somebody to transfer money? And the only thing I can come up with is they never sent money. In fact, Chanos was tweeting about this yesterday, that did they just send SBF bucks or FTT? So were they literally giving people fake money and then claiming the asset on their books? And that's the part I just don't know that we're going to find out anytime soon. Creating a token out of thin air that's a utility token. I mean, that was always the premise, right? Was that these exchange tokens would somehow give you a share of cash flow. So it's not really equity, but I don't think that was the case. I just think it was literally punch a button, print a bunch of more tokens. And here's the crazy part about this is the only way I can make it work is if it really was a Ponzi, which I don't like to use that term, but this kind of works. If you took the FTT and gave it to somebody who actually gave you real cash, right? Then you took that cash and you sent it to the next company. Okay. Then you printed some more FTT and gave it to that company as collateral for a loan. So it's possible that they, printed 700 million of FTT or $1 billion of FTT and gave it to a lender, Celsius, or maybe let's say Celsius. So they gave it to Celsius, and then Celsius gave them real money. And then they gave the money to Genesis. But then my guess is, no, they took that money and gave it back to FTX in exchange for FTT. Then they took, again, this is the same money, right? It's the same money that started in Entity One, came to FTX, went to Genesis, comes back to FTX. Then they give it to a bunch of other companies who then maybe they give some to BlockFi, and then they printed more FTT to BlockFi. And so if that was what was going on, then we're going to find out that's how you make $8 billion disappear, because there was never $8 billion. And I think that's kind of what was going on here. I think they took the money from company A in exchange for worthless tokens, then gave the money, real money, to somebody for some of these deals, but then issued more worthless tokens to another lender. And I believe this is why it all came crumbling down, because of Luna and Three Arrows and Sam going, oh shit, now that money got vaporized. So now I'm going to pretend to buy the lender so they don't call my loan.
Right.
If they don't call my loan, then I'm okay. And that's why I said, there's no chance, zero chance in my mind, that this guy is the mastermind. No chance, none. And I ask listeners that are listening to this, send me a video, not from the last 2 months where he looks like a complete moron, like seriously, can't speak, can't string sentences together, shaking. And maybe that's all an act, maybe. Send me a video from before that where he looks intelligent. I want to see a video where this MIT graduate, mastermind, whiz kid, John D. Rockefeller of our age, or JP Morgan of our age, someone send me a video where he looks intelligent. He's making his case to the court of public opinion. And, I think we talked about last week, there are grandmothers who've said, oh, that poor young man, he's really being, like, what are you talking about?
No,
look at the piece in the Boston Herald or whatever the other day about Caroline. Oh, she was just this, this wonder kid, kindergarten math whiz. And
to be honest,
I can't even.
hysterical.
Because
That's
crypto
hysterical.
makes us all evil. Like I was a really nice guy. I had dark hair, and then I got into crypto, and now I got white hair and I got wrinkles. We need self-regulation, or we're going to get real regulation.
Right.
And the real regulation. I mean, look, regulation isn't bad. We should have rules and we should have standards. And it's hard in a borderless world, like whose jurisdiction are you in and who has responsibility. But at the end of the day, if we don't give people trust in the system, people are going to stop using it. And we're seeing that, right? We're seeing volumes just collapse, and we're seeing money flood off exchange back into cold storage. And I'm a little happy for this part because we're investors in Ledger, and now not as big as some of our other investments, but a meaningful investment.
Yeah.
And they had their best sales month ever. But this wasn't fraud on crypto, right? Crypto didn't fail. Everyone's like, oh, this is a crypto failure. No, this was not a crypto failure. This was a banking failure.
Mm-hmm.
And banks have failed in this same way for centuries. Is bad people do bad things and cook the books or steal. And so this wasn't stolen from the ledger. It wasn't. And so for me, let's have this insurance layer that would allow us to operate in this system with the comfort that if a bad player does a bad thing, that we can be taken care of. We don't need a centralized authority. We can do it decentralized. Why can't there be contracts that every transaction, just a little tax, and it goes into the insurance pool? And instead of the insurance like we do it now, where there's insurance in the UK and insurance in the US and insurance in Panama, insurance in Panama, but insurance and all these pools are small. Let's have one giant pool, like a global pool, because that's more efficient. And let's have it be auditable and public and on a permanent immutable ledger. And then when the inevitable happens, right? When there is a loss, people can make claims